Now that we've heard all kinds of perspectives on the German online gambling market, let's take a closer look at some of the characteristics in this market. To help us do this, we have with us today Ed Birkin, who is Senior Analyst at H2 Gambling Capital, who will tell us more about the size and projected growth of the German market. Ed, thank you for being here. I think we're all eager to hear what you have to say. Thank you.
Right, so now we have even less time. So there are a lot of slides, and I will go through them therefore very quickly. It will be hard to make notes, so don't bother. If anyone would like a copy of the slides, just email myself or Willem afterwards and they will be available to you. Quick disclaimer. What do we do? So briefly, we have different products. Our main product is core market data. We cover over 150 million markets with over 3 million data points. We also cover over 100 companies, do market share reports and bespoke work. So the regulated German gambling market. We do have data on this. The GGL released a report in June of this year giving the 2022 data, and it's also tracked monthly, as you've seen from earlier speakers, on the with the tax data, so you can apply more recent trends. So the German gambling market onshore regulated overall was 13.4 billion euros in 2022, which is just under 200 euros per adult. The online market is 2.5 billion of this. And within this, the bit that I will focus on today is the online betting and iGaming market at 1.3 billion. Now, at the end of 2022, the majority of that was interim license, so that is effectively operators paying tax but not yet licensed. As we have heard this morning, not all of those operators will get licensed, but for the sake of ease, we are going to assume that all of this is the legal market, even though that will not necessarily be the case. So the offshore German gambling market. I would love to tell you we have an answer at exactly what size it is, but as we've heard today by Mr. Franco, we can't always get that. The operators don't give you all of their annual reports, so we have to look at it in a number of ways. So what is an offshore market? This is an operator who is not licensed in the same jurisdiction as the end consumer. As I said, in Germany, we have this issue where there are operators who are permitted, who do not have a license but pay tax, and we therefore include that in the analysis today. Now, the GGL estimates from the 2022 report that the offshore market is between 300 and 500 million euros. However, this includes secondary lotteries, which were previously ranked at about 260 million euros. So that implies about 200 million euros of offshore betting and gaming gross win. Our estimate is 600 million euros at the moment, although we believe that this is very conservative. And in fact, if I'm thinking about the almost 10 years of being at H2, any revisions we've done to our offshore numbers for any market, which is all the time as we get more data, not once have we moved those downwards. They've always, as more information has come to light, have we increased them. So if we look at the market gross win at the moment, a quick look at some rates. So we're looking at excluding lottery. This is the data on the left is from the GGL annual report. We have the channelization. The percent licensed is for those who are just licensed, so the 0.5 billion. And I say percent GGL is probably the wrong way to put it, but that's included the permitted. So you'll see that 41%, which Pontus referred to earlier. If we're looking excluding the lottery, then depending on whether including licensed or permitted, it's around 25 to 70% of the market based on our conservative estimates. If you look in number of websites, again, this has changed slightly in terms of licenses, but at the end of 22, you saw obviously the 34 and 30 licenses. iCasino, as Dr. Hoffman told us, should be slots rather than iCasino, whereas there are over 800 illegal German websites targeting the market. So how do you translate this to gross win? So there's two ways of measuring two broad ways of measuring an offshore market. There's econometric modeling, which is a very high-level model-based techniques of the shadow economy. It is very empirically driven, but we don't think it takes into account the nuances of each individual market. And then there's what we call a bottom-up analysis. And this uses individual market deep dive with multiple sources, taking observational as well as strictly empirical evidence. and there's different calculations and different sources used for each market, which has its own different key drivers. For example, the econometric modeling. There may be something in there that says the offshore market will increase by 1.6% for every 1% change in tax rate, or the offshore market declines by 28% with the introduction of website blocking. Now, this is very useful to get a more scientific view, but this will not be the case in every market. Likewise, a 1% increase in tax can have zero impact on the offshore market. You start adding that up and suddenly another 1%, another 1%, and then it starts to fall off a bit of a cliff. H2's forecasting methodology, and this may be a bit small, but we take into account a lot of different data and a lot of different observational things and come up with our forecast, which will be different for each market. So we will take into account the onshore data, regulation, competitive dynamics, cultural differences in different markets, comparisons to similar markets, web traffic analysis, operator feedback, etc. And when the report that comes out that has been referred to in the last session, we will obviously look at that and take that into account as well. Certain markets we may get data from payment processors, other ones we won't. So it really depends on the market. So I would love to say H2, our data will be 100% correct, but it won't. It is impossible to 100% accurately forecast an offshore market. I think everyone today that's come up here has agreed the same thing. So if you're hoping I'd tell you the exact number, then I apologize for wasting your time. As I say, we tend to be relatively conservative and always have been. So I want to focus on 3 areas today and give you some facts to help you make up your own mind about the market. Operator commentary, web traffic, and a quick comparison with some other markets. So the operator commentary. 888 Holdings, reasonably sized operator in Germany pre-regulation, not one of the largest. They declared in their Q1 2021 results to the market, their net gaming revenue declined by between 40 and 50% in Germany, which was a $30 million loss in revenue in 2021 alone. And because of that, they were forced to shift focus to iGaming from sports because the resultant sports betting, the iGaming market wasn't big enough to sustain their German business. Entain, whose major brand in Germany is bwin, in the first half of 2021, they stated their net gaming revenue declined by 34% year on year. In 2022, they said it declined by a further 19% year on year. In the first half of 2023, they've said that it's declined by a further 30% year on year, which shows their net gaming revenue in the first half of this year was 63% lower than in H1 2020. And Roots gave an interview recently, I believe it could even have been one of the publications here, said that on average, before the state treaty's conditions, players were depositing €350 and gross revenue per player averaged €141. By August this year, GGR per player had halved to €73. And they also estimate around 10% of Roots' pre-regulatory business channeled to the regulated market. So, the conclusions from this is that revenues for operators who are now licensed in Germany are materially lower than they were pre-regulation. And furthermore, it wasn't a one-off loss to revenues when they've started applying this. There has been continued decline each year since 2020 for these operators. Web traffic. Now, I just typed in to Google in German with a German VPN online gaming, and just to make it completely blind test, and found a leading licensed German iGaming operator. I then went on SEMrush and looked at its web traffic, and its licensed web traffic is down 64% compared to its German traffic on its .com site prior to regulation. I then went on and I typed in table games, blackjack, knowing that I would then get an illegal operator, and checked this operator was available in German language, could sign up and pay in euros with a German address and phone number. And this only started operating in the market in 2022. And this already has a quarter of the web traffic of one of the leading onshore iGaming sites. And this is one of 800 offshore sites targeting, iCasino websites targeting the German market. So it is clear there is web traffic heading, as we have heard earlier, heading to these illegal sites, some of which have only just started since the regulation came in. Now, how do you translate this to GGR? As we heard, which is very good for me in the previous talk, time spent on websites, web traffic, is not the same as spend. Now, this is from the UK Gambling Commission analysis. The top 1% of players account for 25% of market gross win. The top 5% account for 60% of market gross win. So in theory, you could have just 5% of traffic going offshore, and that accounts for 60% of the gross win. Now, it's not going to be as extreme as that. Some of the top spending players will be onshore, but especially when you have the restrictions of the onshore sites, then the higher spending players are more likely to go offshore. The KSA, the Dutch regulator, also did analysis and showed that their onshore-only players had an average of 2 accounts per player. Those who played with offshore sites as well had an average of 5.5 accounts per player. Now, this is not definitive, saying the more accounts, the more you spend, but is highly indicative that the offshore players are going to be spending more. So the conclusions: offshore sites target the German market and generate meaningful web traffic. Users of these sites are likely to generate substantially more than users of onshore sites, and there's a 1% of players can account for 25% of the market. Apologies again for going so quickly. Try and get through comparison to other markets. So I've looked at some markets that I believe are comparable and found that the land-based betting and gaming spend in Germany is comparable on average to these other markets, about €100 per person. This is important because we believe it shows a similar propensity to spend on betting and gaming product. Some countries have a high propensity and regardless of the regulation will spend more. Australia on sports betting. Some just have a low propensity and therefore you can't compare them. We believe this is similar. Look online and assuming no illegal market in any of the other ones, this is purely looking at the legal market. The German legal market in 2022 was 83% lower than the comparable markets. And we just don't believe that it's feasible there will be this much of a gap. So how much of that is filled by the offshore? Well, if we took the lowest two of those markets, Italy and the Netherlands, at €70 each, and we assumed that the German market got to half of that, this would assume a further €18 per person. Put this into context, GGL data suggests it's less than €3. We conservatively believe it's around €9. €18 would assume an offshore market of about 1.2 billion. Again, that's just assuming half of that average. There's no reason behind why you should assume that. Could be higher, could be lower. What we do know is the taxed iGaming revenue has been declining materially, down 37% in the first 7 months of 2023. What we don't know is how much of this is taxed operators who have left the market because they're not getting licensed, which is all part of a strong licensing process of the GGL and should be welcomed, or whether it's licensed operators who are just seeing their share being lost to offshore operators. If you look compared to the Netherlands, which regulated at a similar time, you can see the Netherlands has a positive growth trajectory, which is what you would expect in a market post-regulation. If you look on a per adult basis, it is now the Dutch iGaming market is 11 times the size of the German market. But again, there could be different dynamics, there could be different propensity to game. So let's look at the land-based market. The German and Dutch land-based market, we believe, are relatively similar. And in terms of spend per adult, they're almost identical, with €86 on Germany and €84 in the Netherlands in 2022. In 2022, on iGaming, there's a significant difference. €12 versus €54, or over 4 times the size. Annualize the data from 2023 for the first 7 months, and suddenly you have €8 per adult for Germany and 75 for the Netherlands. Now, we are not saying that the German market is €75 per person, but how big is the gap, the offshore, to fill this gap, given a similar propensity to spend for the land-based business? If you assumed that there's no offshore market in the Netherlands, which we know there is a small one still, and the German market was just 50% of the Dutch onshore market, this would put the offshore iGaming market at €2 billion in Germany. Again, we are not saying this is the market size. These are just some numbers filling in the gaps for people to think about. So, the conclusions for comparing it with similar markets. Germany, in our view, has a similar propensity to spend on betting and gaming to some other European markets we've shown, based on their official land-based data. However, the onshore online market is so much lower than this that there has to be some meaningful offshore market to fill this gap. And even filling half of this gap implies the German offshore market for betting and gaming is likely to be over 1 billion euros and an argument for potentially up to 2 billion euros. So to conclude, factually what we have seen is that operators have seen a significant decline in revenues since regulation. I don't think that's questioned. We also know there are over 800 offshore sites targeting the German online market, generating meaningful web traffic. Again, that's not something that's questioned. Players who use offshore sites are likely to be higher spending than those who use onshore sites. 60% of the market can come from the top 5% of players. Now, we don't know that factually, that they are spending more on offshore sites, but we think it's pretty obvious. And the gap between the German onshore market and comparable markets is too substantial for there not to be a significant illegal market. So finally, how big could the offshore market be? Well, the GGL implied estimate is 200 million euros or 3 euros per adult. Our conservative estimate is 600 million or 9 euros per adult. If you did the full gap between the onshore German market and comparable onshore markets, which it would never be given the onshore market would always be higher than the offshore with the same regulation, 90 euros per adult or 6 billion. However, there's a plausible estimate that it could be somewhere between 1 to 2 billion. Thank you, and if you'd like a copy of the slides, please email me or Willem.
Thank you, Ed. A lot of very interesting information. Ed's email address was at the last slide, or email myself or Sarah, who you all know, and we'll get the slides to you. I think there's one audience question we'd like to ask you, Ed. Ed, do you think the trend to the black market is speeding up?
I mean, the speed up happened, the big jump, obviously, when the regulation came in. But if we were to assume what was said earlier, which I generally agree with, that the market size overall hasn't really changed, and you look at what's happening with the onshore market in terms of the tax revenues, which is that has been declining substantially this year, especially on the iGaming, then it would be fair to say that the black market is growing.
Okay. Ed, thank you very much for sharing this with us. Thank you.
Thank you.